Namaste, and a very warm welcome to our presentation on Power Sector Investment Analysis, Unlocking Infrastructure Finance and Growth Opportunities. In today's dynamic global economy, the power sector stands as a cornerstone for industrial development and societal well-being. This analysis is tailored for individuals and professionals keen on understanding, managing, and growing their financial resources within this critical sector. We'll explore the evolving landscape, identifying key drivers, innovative financing models, and the immense growth potential that lies ahead. Our objective is to provide you with actionable insights, helping you navigate the complexities and capitalize on the significant investment avenues available in the global power industry. Let's delve in. The global demand for energy is on an inexorable rise, fueled by several macroeconomic and demographic forces. We are witnessing unprecedented global population growth, particularly in emerging economies, which directly translates to a greater need for power. Alongside this, rapid industrialization across continents is escalating commercial and manufacturing energy consumption. Furthermore, the global push towards electrification, from transportation to remote households, is creating new, substantial demand centers. These factors collectively underscore the imperative for significant investment in power generation and infrastructure to meet these burgeoning needs, making the power sector a perpetually attractive investment destination. Understanding these trends is crucial for strategic allocation of capital. Several powerful catalysts are currently propelling investment into the power sector. Firstly, robust policy and regulatory support from governments worldwide is creating a stable and predictable environment for long-term capital deployment. Incentives for renewable energy, grid modernization, and infrastructure development are common. Secondly, continuous technological innovation, especially in areas like solar, wind, battery storage, and smart grids, is enhancing efficiency, reducing costs, and opening new avenues for profitable ventures. Lastly, the increasing focus on environmental, social, and governance (ESG) mandates is directing substantial institutional capital towards sustainable and responsible power projects, aligning investment with global sustainability goals. These drivers form a strong foundation for future growth. The landscape of power sector investment is undergoing a significant transformation. Historically dominated by fossil fuels, we are now witnessing a pronounced shift towards renewable energy sources. There's a noticeable decline in new investments in traditional fossil fuel-based generation, driven by environmental concerns, fluctuating commodity prices, and increasing regulatory pressures. Conversely, the rise in renewable energy projects, particularly solar and wind, is phenomenal. This surge is propelled by decreasing costs, technological advancements, and strong government incentives and public demand for sustainable energy. This paradigm shift presents both challenges for legacy assets and immense opportunities for pioneering investments in the green energy transition, redefining the future of power generation. To fund the massive capital requirements of the power sector, a variety of innovative financing models are being deployed. Public-private partnerships, or PPPs, are increasingly popular, leveraging both governmental expertise and private sector efficiency and capital. These models effectively mitigate risks and share responsibilities. Green bonds represent another critical avenue, specifically designed to finance environmentally friendly projects, including renewable energy and energy efficiency initiatives. They attract a growing pool of socially conscious investors. Project finance structures with their non-recourse or limited recourse debt are also vital for large-scale power projects, allowing complex ventures to be funded based on their own projected cash flows. Understanding these models is key to accessing diverse funding sources. Emerging markets present some of the most compelling growth opportunities within the power sector. These regions are characterized by rapid urbanization, leading to an explosive demand for electricity in new cities and expanding urban centers. There is vast untapped potential, particularly for renewable energy, given often abundant natural resources like solar irradiance and wind. However, investors must also navigate potential policy risks, including regulatory instability or lack of clear frameworks, which can affect project viability. Despite these challenges, the sheer scale of unmet demand and the trajectory of economic growth make these markets indispensable for investors seeking high returns and long-term expansion in their power sector portfolios. While the opportunities are vast, power sector investments are not without their inherent risks, and effective mitigation is crucial. Regulatory uncertainty poses a significant challenge. Shifts in policy or tariff structures can impact project economics and investor returns. Project execution risks, including delays in construction, cost overruns, or operational inefficiencies, can severely affect profitability and timelines. Furthermore, market price volatility, especially for fossil fuels or power purchase agreement prices, can introduce revenue instability. A thorough understanding and proactive management of these risks through detailed due diligence, robust contracts, and diversification are paramount for safeguarding investments and ensuring sustainable returns in this capital-intensive sector. Looking at recent performance, the power sector, particularly renewables, has demonstrated robust investment returns. We've seen strong returns in renewables, outperforming many traditional asset classes due to decreasing costs and increased demand. Stable, regulated assets, such as transmission and distribution networks, continue to offer consistent, predictable cash flows, making them attractive for long-term investors seeking stability. The long-term growth outlook remains exceedingly positive, driven by electrification, decarbonization goals, and technological advancements. This outlook suggests that the power sector will continue to be a compelling area for strategic capital allocation, offering both growth potential and stable income streams for discerning investors. For investors looking to capitalize on the power sector's potential, we offer several strategic recommendations. Firstly, diversify your portfolio across different technologies and geographies to mitigate specific market or regulatory risks. Secondly, conduct thorough due diligence on potential projects. This includes rigorous financial analysis, risk assessment, and legal review to ensure project viability and returns. Lastly, partner with experienced developers and operators who possess a proven track record in the power sector. Their expertise can be invaluable in navigating complex project development, execution, and operational challenges. Adhering to these principles will significantly enhance your chances of successful and profitable power sector investments. In conclusion, the power sector stands as a formidable investment opportunity, critical for global economic development and societal advancement. We've identified its significant growth potential, driven by surging demand, technological innovation, and a global shift towards sustainability. It is not just about generating electricity, it's about powering progress, innovation, and prosperity. While challenges exist, strategic investment, guided by careful analysis and risk mitigation, can unlock substantial returns. We firmly believe that investing in the power sector today is a strategic imperative, laying the foundation for a sustainable and energized future. Thank you, and I now welcome your questions.